Welcome to our live AMA. My name is Tony Cameron and I am with TLDR Accounting, where we keep taxes and accounting simple. Today's topic for our Ask Me Anything, we're going to start with estimated taxes and how do they change when you become an S corporation and put on payroll. So, estimated taxes, otherwise also called quarterly taxes. They need to be paid in if you're a freelancer or a small business owner, and it is how the government is paid withholding when you're not on payroll. So if you're working for a normal job as an employee, you have withholding that's taken out every paycheck that gets paid in and you report it on your tax return. But when you are self-employed or a small business owner, you don't have that. That's not how it works. You have people paying you, you have expenses outgoing in each quarter. You need to pay in your estimated taxes. So how do you figure that out? How does that work? So you can pay your estimated taxes online at www.irs.gov/directpay. The actual dates aren't right on the quarters because that would be too simple, and this is the government. They are April 15th, June 15th, which is not a quarter end, September 15th, and then January 15th. So lots of fun remembering those, and I can pop some more information in the channel about that at the end of the recording. But you need to be paying those in. It's a pay-as-you-go tax system. So you make an estimate tax payment online on each of those dates, and then at year end, you report you made those estimated tax payments, you report your business income and expenses on your tax return, and hopefully you were close. Maybe you weren't. Maybe you overpaid and you get a refund, or maybe you still owe some. And then the next year, you, depending on how you did your taxes, it will give you an amount you should pay in roughly each quarter so that you hit safe harbor. And safe harbor is the amount that if you pay it in, you won't owe any fines and penalties on it, which is always great because no one likes to pay interest and penalties. So how does this all change when you now become an S corporation and you're on payroll? So before, when you had been on payroll as an employee and not a business owner, your withholding was taken out, and then you just filed your taxes as normal. Now you're a business owner and you're an employee of the company. So you'll still have your withholding coming out of your paychecks. Normally, if you don't go into a tax planning situation, that withholding is just based on your salary. And so it's the same as being an employee. Your withholding we based on how much your salary is, and then you still have estimated taxes. Now with us, we talk to our clients about upping your withholding on your pay stubs, so then you don't owe quarterly estimated taxes. Because the best thing about withholding on payroll is it's treated as if it's paid equally during the whole year. So when you make an estimated tax payment, the date you paid it in is recorded, and that's how they allocate based on that date, whether you paid in enough or not. But if we up your withholding, it's applied equally over the year, which reduces the likelihood of underpayment of your taxes, which is pretty fantastic if you think about it. So one of the things you can look at as you become an S corporation owner and your payroll is set up is, should you be increasing your withholding so you don't have to pay quarterly estimated taxes? We also have the inverse, where some folks, especially the first year, they've been paying quarterly estimated taxes in. It's their third quarter, we're getting their payroll finished set up because of the S-Corp election. And so now they're like, no, let's just stick with quarterly estimated taxes. I'll put a small amount of withholding. And then next year we'll run the whole plan. We'll figure out what my withholding should be for each paycheck, and we'll move forward from there. So as you can guess, this can be a little bit of a complicated topic depending on what your numbers look like, but you do have those two options of increasing your withholding to not pay estimated taxes, or continuing to pay estimated taxes as you see fit. Again, we do recommend increasing your withholding to cover your total taxes due, just because it does have that benefit of being equally applied during the whole year. And that's always fantastic, lessening the likelihood of fines and penalties.